with stocks like NEO, SBE, XPeng going parabolic. Everyone is just so focused on this shiny object, they totally just forget about those hidden gems just right around the corner. It is like this fancy new restaurant that just opened up in town. Everyone flocks to go queue for this new restaurant, but they just forget about their childhood store, which is right by the side, selling just as good premium food, but for a cheaper price. And in today's video, I'm going to uncover these hidden gems for you. Before I get into my top 3 favorite discount stocks for next week, all I ask for is for you to hit that delicious looking like button. It really helped this new channel out a lot, and I appreciate it. And if you find my content of value, please do tickle that subscribe button. Cue intro. Welcome back, my value friends, to the Stock Estate. I'm an ex-financial advisor, and in this video, I'm going to pick out 3 of my favorite discount stocks for next week. Okay, so let's get right into it. So for the first of my discount stocks, I'm going to talk about Agora Stock, which is ticker symbol API. Okay, what does Agora do? Okay, Agora provides real-time engagement platform as a service. So it is a PaaS service in China, okay, and in United States as well. Okay, they offer developers with software tools to embed real-time video, voice, and messaging functionalities into applications. Okay, so it's like instead of using external source of like a application, right? For exchanging your voice, talking over with your friends. Okay, you embed this application, you make your own application and embed this directly into your own application itself. So this company's enterprise-grade products include real-time video, real-time voice, live interaction video, audio streaming, etc., etc. Okay, so basically they offer solutions in areas of social, education, entertainment, gaming. I can see it being really huge in gaming itself, especially for those independent developers who wants to embed live streaming onto their own software itself, enterprise, financial services, and many others. Okay, so it's founded in Shanghai, China, and it has been founded during 2013. Okay, so basically, let me explain a little bit more about what is PaaS. Okay, you have heard IaaS and many others. So okay, you can see here there's IaaS, PaaS, and SaaS. Okay, as an example of SaaS is actually Zoom. Okay, so Zoom, okay, they provide their software as as a service which has applications, data, runtime, and many other things. Okay, PaaS is I would say a smaller version of that. Okay, they don't really provide the application for you. So you can see Zoom, right? They provide the application itself for you. But instead for Agora, okay, they want to embed all these runtime, visualization, server, storage, and networking into the developer's own systems, into their own apps. So they're not providing the application. They are integrating all of these into the developer's applications. So this is PaaS. And IaaS is actually even a shorter version of that, which they take out the runtime, middleware, as well as OS, which we don't have to explore for this video itself. Okay, so now you know a little bit more about what API actually does, right? Okay, now we're gonna go right into the stock itself. Okay, and why do I think it's such a good discount stock? Okay, so let's look at the pricing itself. Okay, so firstly, when I look for discount stocks, right, I'm looking for 2 things. The first thing is basically whether this is fundamentally a good stock itself, a fundamentally good value stock. Okay, if it's not a fundamentally good value stock, then there's no point in buying it at all. Okay, secondly, which is what we're going to do here, is we're going to look at the technicals and decide that whether are we buying this at a discount or an area of value. Okay, so we do not want to be buying here around these levels. We want to be buying here. We want to be buying at the very lows, so that there's very little risk to the downside and massive potential for the upside. Okay, and in this chart, right, you can see that back when IPO'd all the way, the trend itself, when it IPO'd here, okay, you can see that it has been really bullish. Okay, it has been smashing through expectations from its IPO price of around $43 all the way up to $50 plus, $60 even. Okay, then from then on, it has been actually in a downtrend. Okay, mainly because after reading their earnings call and their conference call, they have come up with nothing impressive, and the initial hype was just way overhyped, and people start to sell off a little bit more. But basically, what I've been looking at is their business fundamentals. Nothing really bad has really happened. Okay, and it doesn't really justify this, deep drop all the way down here. Okay, their recent earnings call was nothing super impressive as well, and hence people might be thinking that, okay, maybe it's nothing much interesting about this stock, and they just leave. Okay, and you can see that it's slowly decreasing all the way to this support level right here. I can see support level at $35. Okay, so you can see there's a huge downward pressure all the way here, and then you can see a nice bullish candle here. Okay, so what does this mean as a bullish candle? That means, you see this long head, so that means that the price opened here. Okay, sellers are pushing it, are selling all the way down past that support level. But then the buyer says, no, okay, I'm willing to buy at this level. So a lot of them bought at these levels, and it pushes the price all the way up to close green on the day, which is super bullish. Okay, you can see another similar candle here as well. Okay, so you can see that this is kind of like the bottom line. It gives you a technical feel of, that what the buyers and sellers, the demand and supply is judging around this range. A lot of people are willing to buy these ranges. So, and you can see a steady uptrend up. So this is an area of value. Okay, so whenever I talk about discount stocks, right, it's not really for a good, not really for a swing trade. Okay, it's at least a 3 to 4 month hold to reap the benefits of a long term uptrend. Okay, so in the short term, okay, I can even see this hitting all the way up here, $40, and you can see that it's on downtrend, right? A current downtrend. It might get rejected again at these prices around $39, goes back down all the way down to $35, come up again, go down again, and just keep trading around this area. Okay, until the next earnings call or they come out with something impressive. Okay, boy, do I think that this will actually rocket upwards. Okay, so now that we have established that this is an area of value, right, and we are buying this at a discount. Okay, and I'll now talk about the valuations and whether this is actually a good company. Okay, so let's look at the key stats itself. Okay, so now we're going to look at API versus their competitors. Okay, the closest one I can find, one of them I can find is JAMF, which is JMF Holdings. Okay, you can look at them. Okay, you can see that basically, okay, their valuation wise, you can look at the valuation. Okay, so valuation of API is definitely much higher than JMF. Okay, but P ratio sometimes is not really indicative of what is actually going on behind the scenes. Okay, because a company can be spending a lot. Okay, it's a lot on like its R&D, its marketing and everything. So for an early company, they're just IPO, right? It's quite normal for them to having earnings to be quite less and this share price to be a bit higher. So we look at the price to sales ratio and can see that price to sales ratio, much more reasonable. Okay, that means they're selling a lot. Selling a lot of products, and it justifies their price versus to the sales. Okay, now we look at profitability itself. Okay, you can see that JAMF is actually much more profitable than API. Okay, not much more, but actually a difference of 15% is pretty significant as well. But however, when we looked at net income itself, it is 0.61. They're actually making a decent net income, whereas this company is actually suffering losses on its net income. So what does this mean? Okay, so gross profit, is the top line. Okay, so after selling all their goods and services and everything, this is what they totally get from sales. 66% growth. Okay, 80% growth. But however, after minusing expenses, okay, API actually comes out on top. Okay, and API, which means that API is actually have very low margins and have a very strong bottom line. So they are not spending a lot on developing their software, their things. They're spending much lesser, so much lesser that even though they're earning lesser than JMF, right, but they're actually overall much more profitable than JMF. So which is a good sign. And after doing a little bit further research on this, I can conclude that mainly because I think they're developing a lot of their products in their home ground, which is Shanghai, China, and this gives them a lot of advantage when they develop there for very cheap costs, and they are able to save up on so much expenses. So okay, you can see that that's a good price as well. It's good stuff. Okay, and another thing is I want to look at it whether there's a chance of it being bankrupt. Okay, a company goes bankrupt because they have no cash in their system. Okay, their cash flow is shit. Okay, so we look at API, right? Okay, almost $500 million of cash. They are just there. Okay, total cash per share, $6 plus. Okay, that's a lot of money. Okay, so you can see that they have a massive amount of funds sitting, on the sidelines, waiting to reinvest in better things, and if they decide to acquire another company, they do some revolutionary thing, they do this cash, right? And I think that will be a potential catalyst for this stock actually popping. Okay, and we can see that, this total cash, very high, so actually the chance and the risks of this, this company going bankrupt is very little, and that's what I really like, and I feel safe as an investor when I invest in these companies itself. Okay, so you can see, very decent price points, okay, and decent value as a company, decent value at the stock price itself. So with these two combined, I can feel that Agora is one of my favorites, to start building a position right now. Okay, now we move on to our next one. Okay, the next stock is one of my personal favorites, which is Hyliion stock, which is ticker symbol HYLN. Okay, so Hyliion stock has been severely beat down, as you can see. It's been beaten down all the way from its all-time highs of 60, almost reaching $60, and down all the way to a bottom of around $17. Okay, that was a huge drop from there. Okay, and from the bottom of around $17, which is the previous support and resistance line, okay, we can start to see a slow uptrend, okay, making higher highs and lower lows, all the way to the current price, which is around $24, okay? And why do I think it's such a good value, or it's such a very good buy at a discount right now? Okay, so there's a few factors, 3 main factors that I do want to talk about right now. Okay, the first point is I believe that, the EV trend is a really stable trend, and it is a trend that we should really take advantage of. Okay, so you can see stocks, like SBE, NIO, Tesla has been going all the way, to the moon, and they have been really coming up with their price targets, and really analysts have been really covering that stock a lot. Okay, they are, as I said again, that bright, shiny new gold piece, that's been displayed for everyone to see, and everyone's just so focused on that they're forgetting about, all those hidden gems. And Hyliion is just one of those. It has been severely beaten down, and I believe that the hype itself, the EV hype, the sector hype itself, didn't really explode in Hyliion yet. Okay, it has already been exploded in other EV sectors, other EV companies, except for Hyliion. Okay, it's insane. Okay, even those really small time companies, okay, like BEM, every single company that just mentions the word EV has exploded. Okay, except for Hyliion. Okay, and the thing is, Hyliion is a pretty decent company, with a very niche in the trucking industry. Their 2 main business models is first their business is actually to create they are selling their trucks itself, the electric trucks itself, Hyper ERX. Okay, and the second one is actually converting, in layman's term, right, converting the current combustion trucks, okay, and converting them to a semi-electric truck. Okay, so those are the 2 key businesses, and their total addressable market is really huge, okay, and they have really massive potential in that. But why is it not actually increasing this stock? Why has it not been popping off as much? Okay, firstly, which leads to my second point, is that there is this ongoing doubt and uncertainty about the warrants being exercised. Okay, and because a lot of people bought a lot of warrants during the pre-merger phase, okay, and some of them bought in very early, okay, and the thing is, once the warrants are able to be converted, okay, there's expected to be a lot of people who wants to lock in profits or sell, and which this leads to a very high selling pressure. So people are afraid that, if they buy now, okay, then once the warrants are exercised, they are going to suffer a loss first, okay, and nobody wants that. Okay, so there's a lot of uncertainty, and when uncertainty comes, right, investors like to invest into uncertainty. So I feel like a lot of investors are really excited and interested in Hyliion and do want to jump on this bandwagon. But however, they're just fearful of this warrants issue, and they just want to wait until all the warrants has been exercised. People who want to sell have sold already, and then they start buying in. And by then, I feel like the boom will actually catch up to Hyliion. Okay, and when do I feel like the pop is going to come? Okay, so firstly, it's with the warrants out of the way. Okay, if an analyst expectations, an analyst starts covering on Hyliion, right, on some news, on some partnerships, and they give a price target that is higher, we can really expect to see it really explode. Okay, and because the current price target for Hyliion of one of the analysts is actually $22, which is a bit lower than the price now. So in a sense, this gives like a benchmark for people to, not want to deviate too much from it. Okay, but as you can see from the example of FSR, which is Fisker, which has just merged not too long ago, they actually, have an analyst which covered and set a price target for them. And with that analyst coverage and that price target set, with no news at all, okay, no new news at all, right? They just exploded, okay, literally exploded. Okay, if you can see over here, right, they exploded all the way from $16 all the way to $21, okay, in one shot, a 30 to 40% pop. Okay, absolutely insane, okay, with that. So we just need another catalyst like this to explode upwards. Okay, so just to make clear, okay, I myself am a long-term investor in Hyliion. Okay, I do have a sizable position in here. Okay, I'm not saying this just to hype up the stock or anything. Okay, I do personally believe that it's a really, really great company. Okay, if I have bought it at a higher price, right, I'm definitely more willing to add to my positions at a lower level, which is right now, which I see a recovery coming, and hence I'll definitely be adding more positions from time to time to average down on my position on Hyliion. As I said, for a long-term investor, it's about how many shares you own, and for the short-term investor, it's about what the price of the stock is. Okay, so you can quote me on that. Okay, right. So let's move on to the next one, the last of the discount stocks, which I'm very, really excited about, which is ticker symbol BABA, which is Alibaba. Okay, I previously have kind of covered this stock already in one of my previous videos. I'll link the title of the video up there. Okay, you can go check it out, which I really list a bit more in depth about Baba's situation and what caused the Baba's drop. Okay, but I can see over in the chart over here, right, that Baba has actually, has already been forming a very stable rebound, okay, from its lows of $253 all the way to $276, which I can see a small consolidation, okay, right at the 100 period moving average. Okay, it's gonna consolidate for a while, no drop. I feel like it's gonna fluctuate around 279 and 284, around that range, for a while. Okay, before massively exploding upwards once all the uncertainty and all the stuff about the regulatory things on the tech giants, in China has been cleared. Okay, and I can see once it's been cleared, this will be set for a very long-term uptrend. Okay, and I can see this period of consolidation as a time, for us to slowly, build your position in this. Okay, if you're really interested in this, what I would do is I would slowly build my position higher, because there's really not a lot of downside to this, because I can see this as a really, really big company which has very, very less chance, of it going bankrupt or having a very, very major event which destroys our entire investment. So with these kind of companies, right, I feel very, very safe investing a larger portion of my portfolio into these. So I can see, me actually building my position in this stock itself. Okay, I can see it safely, by the end of the year to next year, safely going back up to the 300s, okay, and further beyond, and continuing its uptrend, which has been further broken by the suspend of an IPO. Alright, that's it for my top 3 discount stocks for the next week. And I just want to leave you, with a personal investing theory of mine, okay, which is, for me myself, we always want to catch, the stock before it explodes. Okay, you want my stance is like, I like a steady climb with ups and downs compared to really parabolic moves, because this actually forms many support lines to fall back on, and a lot of consolidation areas where there's a lot of buyers and sellers. Okay, and the price will be much more stable than not a huge parabolic move upwards, because when there's such a huge parabolic move upwards, right, okay, that means there is a lot of buyers, but not a lot of sellers. Okay, so when there's such an imbalance, right, okay, when it hits a high where sellers starts to step in, okay, a lot of the buyers will be converted into sellers. So let me repeat that again. Buyers will be converted into sellers because, they want to sell and take their profits. So at that point in time, the sellers will just overwhelm the buyers. Everyone will just start converting and dump, and that will lead to a huge sell-off. Okay, and that's such a huge parabolic move downwards. So I do not really like to put a large size of my positions into such parabolic moves. Okay, so that's why, I always love to, find these discount stocks, to buy the area of value and, minimize my risk downwards. Okay, because really my personal investing theory is, it's not about how much you can make. It's really about how much you can keep. Okay, and let me know in the comments below, whether you like these kinds of videos. So every week now, I'll probably post one of these kind of videos where, drop a few names, numerous names of stocks that I'm having interest in. Okay, and some of my very plain simple reasons why. So it would not be a super in-depth analysis, okay, because if I had to do an in-depth analysis about every single one, this video will be like 3 hours long. Okay, so I would drop many names and you will have to do your own due diligence. Okay, please do know that all of this is not financial advice, and really so important, to do your own due diligence, because only then you have confidence in investing. And if you have invested, you'll feel really good knowing that you have put in the work to do your own due diligence, and all the gains that you have is really solely credited to you. Okay, and I'll be really happy for you if you do that. Okay, so just imagine me as like your financial bro, okay, like your brother or your that cousin, who is just there, to just drop you a few, recommendations, okay, and just talk to you about things, my own personal investing psychology, and hopefully I really hope that all of these have actually helped you a little bit, at least a little bit. Okay, so if you really like the video, please drop a like, and as well as tickle that delicious looking subscribe button, to join this community, and so that you can keep up to date to know what I'm looking at and do your own due diligence and make some huge gains. Thank you very much for watching this video. Stock has stayed up.